At the start of 2025, I made a video breaking down the major changes coming to Toronto real estate. Now that 2025 has come to an end, I want to revisit that video and look at what actually happened. Did those changes have the effects that people thought they would? And what can we take from 2025 as we head into 2026? One of the biggest changes heading into 2025 was the mortgage rule update that made it possible to buy homes up to $1.5 million with less than 20% down, instead of capping it at the previous $1 million. The expectation wasn't that this would suddenly push prices higher across the board. The idea was a little more specific, that buyers with strong incomes but limited savings, so mainly young professionals, would now be able to compete in the $1 to $1.5 million price range. In theory, that should have increased demand and activity in that segment. But when we look at the data, that surge didn't really happen. Looking at TREB's PropTex data, there were about 5,950 freehold and condo sales in the $1 to $1.5 million range in 2024. In 2025, that number is closer to 5,300, so much less. And what does that tell us? Well, it tells us that removing a barrier doesn't automatically create demand. We're used to believing that because demand has always been so high, but the rule change, even though it helps on paper, affordability, buyer confidence, and overall economic uncertainty play way more of a role. And that's kind of the theme of 2025. Buyers aren't going to just rush in because the rules have changed. Now, in my video from a year ago, I spoke about the expert forecasts that were out at the time, and according to experts, for their 2025 predictions, they expected Toronto home prices to rise around 5%. Detached homes were forecast to perform the best, while condo prices were expected to dip only slightly due to supply and affordability pressures. Those forecasts, obviously I'm sure as you know, didn't play out the way they expected. Even the organizations that published these forecasts have since acknowledged they were off, describing 2025 more as a market reset rather than the growth year that they originally predicted. And that's a bit of an important reminder that forecasts are built on the information available at the time. They're not guarantees. Once the geopolitical events that unfolded throughout the year began to impact the global economy, most 2025 forecasts across multiple industries, not just real estate, were effectively thrown out the window. What 2025 ultimately showed us is that job security, buyer psychology, and financing friction mattered far more than headline expectations. Rate cuts and policy tweaks alone were not enough to meaningfully change buyer behavior. There was just so many more factors at play. Now, while the price forecasts missed, some of the underlying logic still held up. For detached homes, the core issue continues to be supply. There just simply aren't detached homes being built in Toronto, and long-term demand from families hasn't gone away. The scarcity helped support the market, even if the price growth people expected didn't really materialize. At the same time, buyers became more selective. Well-located homes with good layouts and realistic pricing continued to sell. But properties that had even the smallest layout issues, conditional problems, or ambitious pricing sat on the market much longer than they would have in 2024. In 2024, those homes still sold, they just took a little bit longer than their competitors. In 2025, most of them completely stalled, even with dramatic price cuts. They just never sold. On the condo side, oversupply was the dominant factor in 2025, especially with large waves of new completions coming to market. That made the divide between good units and bad units even more obvious. Functional layouts, livable spaces, and strong locations held up. Investor area units with poor layouts or bad livability saw a huge drop in demand as buyers realized they really no longer needed to compromise on these units. Livable units priced appropriately are still selling within a reasonable time frame, but units that used to sell simply because the market was tight are now sitting and only moving if they're deeply discounted. Now, in that original video from a year ago, I also talked about some opportunities where buyers or sellers could do well. For buyers, opportunities did exist in 2025, especially for people who were patient, well-capitalized, and focused on long-term livability rather than short-term appreciation. Condos in particular offered a lot more choice and tons of negotiating power compared to anything we've seen in recent years. For sellers, the picture was a bit more split. Freehold sellers who priced realistically and understood buyer psychology generally did well. Condo sellers, on the other hand, struggled with coming to the reality of today's prices. In a high supply environment, marketing strategy and pricing mattered more than ever. So, what does all of this tell us as we head into 2026? Well, some industry forecasts are now calling for modest price growth next year, after what's being described as a reset year in 2025. But after the past year, I think it's clear that forecasts should be really treated as scenarios and not outcomes. Where I'm going to be keeping an eye on things is definitely in the condo market. Supply is still elevated and more completions are on the way in 2026 and even into 2027. That doesn't mean condos are necessarily a bad investment or a bad place to live. It just means not all condos are going to be performing the same as we've already seen in 2025. The market is going to continue to reward functional units in strong locations because the supply of those isn't really increasing. It's only increasing from luxury projects, and that's a very small segment of the market. The pressure on product that was designed primarily for investors will keep increasing, and I'm particularly interested in how developers are going to react to this. They'll eventually need to start projects, and if it's more bad layouts like I've been seeing in a lot of recent proposals, then those large livable units will only continue to rise in demand and value. Rather than watching headline price forecasts, I'd recommend watching how inventory actually gets absorbed, especially as spring comes around. How resale pricing compares to new build pricing is also going to be very important, and how end user demand evolves as affordability and confidence change. The biggest lesson from 2025 isn't whether prices went up or down. It's easy to get caught up in the market news, headlines, and monthly market stats. A lot of people treat them the same way they treat the stock market, reacting to every little small move. For me, what this year really enforced is that policy changes, forecasts, and headlines don't move markets on their own. The consumer does. People's confidence in their job security and affordability issues and real-world behavior end up mattering far more than anything else. And it's markets exactly like this where having experienced local guidance matters the most. If you've watched my channel, you know how much time I spend digging into Toronto's neighborhoods, data, and market dynamics. I'd be more than happy to help you guide through it. So if you're thinking about buying, selling, or just want a second opinion or some advice, feel free to reach out anytime. My contact info is always down in the description below. Thank you for watching. If you found this video helpful, don't forget to like the video, subscribe, share it with your friends on social media, and of course, leave your thoughts on what we saw in Toronto's real estate market in 2025 down in the comments below. Thanks again for watching, and I'll catch you in the next video.